It's Welcome to the Resolution.
All right, Jay, how you doing?
Good.
So let's talk a little bit about entities and payroll tax, I guess, today, right? Is there kind of topic?
Entities, meaning corporations, partnerships, multi-member LLCs, single-member LLCs. Why choose one rather than the other?
So small business person setting up a new business.
Is there a benefit to doing it? And then if owing payroll taxes, 941s, and the various impacts that your entity choice will have on that, and then payroll taxes in general, how to resolve. This is a good topic that Washington Tax Services has been dealing with in our 33-year history here in 2022. I'm happy to share some of our secrets and maybe our institutional knowledge that we hatch here for you might compel you to contact us through our website, watax.com. Send us an email or call us on the phone number listed.
So you've got a choice when you're a business person, how to set up your business, right? So
right.
You've got multiple kinds of options. Can you run down a couple of those?
Sure. So if you set up a lemonade stand outside, you default as a sole proprietor. If you make profits, you'll file a tax return every year with your personal tax return. And you'll be basically funding your own Social Security and Medicare as if you're your own employer, and basically on top of the federal taxes that you may or may not owe, depending on how much income you make, you will also be funding your Social Security and Medicare, paying the full boat 15.35% as if you were your own employer, which you are. So sole prop is how most people go for very simple things, realtors, plumbers, truck drivers, some physicians, chiropractors, acupuncturists, for most people, certainly people that are, making less than six figures, it's a very common choice to make. Entities come into play on two different thresholds. One is protecting yourself from getting sued, and then also maybe getting some tax benefits. As well as utilities in the law that are nice to exploit that being a sole proprietor doesn't allow you to do. I'll touch upon a few of those. But bottom line is, let's just cover the liability stuff limitedly, as we're tax people. We're not,
sure.
You nor I are a tax attorney. I am an enrolled agent, licensed tax professional, and Washington Tax Services had tax attorneys on staff throughout our history. But in any case, if you get it, you can go on LegalZoom or through an attorney that we have access to, set up a single member LLC. That LLC limited liability corporation will protect you, possibly your personal assets, from a lawsuit.
This is kind of like maybe, I don't know if I want to consider it next step from a sole prop, but maybe
right.
Maybe I guess single member LLC.
If we're creating a ladder, single member LLC is one above. Tax-wise, you're the same as a sole prop. Mm-hmm. Nothing fancy. You default as a sole prop, but you do get some protection from lawsuits should your business run into trouble, and protection of your own personal assets. So
when you say default, like as far as file tax is more or less the same as you would a sole prop as in a single member LLC?
Yes. Yeah, you just born. Yeah. So, so we'll continue up the ladder.
Yeah.
If you have more than one member in an LLC, you're a multi-member LLC, and you default as a partnership, unless, we're not going to spend too long on this, you live in a community property state like Texas or California, and you're married to somebody, and you create a multi-member LLC between you two, you can continue to operate that business if you prefer as a sole proprietorship and not a partnership. But if you have a non-family member in any state, or a family member in a Commonwealth state, not community property state, then you're going to file a partnership return, Form 1065. So we'll keep going up the ladder.
Yeah.
Partnerships are, I'm not going to spend a whole lot of time on their benefits, but some people create partnerships for very special carve-out percentages of like ownership. it's a good entity to be. But I'm going to segue to possibly better entities. You can be a corporation, and corporations, if you create a corporation, you default as a C Corp, and you don't do anything special. A C Corp, effectively since 2018, pays a 22% flat tax rate on their profits, and that tax is the obligation of the corporation only, not you individually. And if you, the owner, want to take money out of the corporation, then you are paid dividends, which have a different tax rate than other income, but you are double taxed, which is the C Corp jinx. C Corp is a good model, particularly for a company with a lot of growth that has a lot of churn of their cash flow to invest into the business, and the owners are patient not to get dividends anytime soon. But the next more common thing is to be an S Corp, which is a choice you have to make by filing the Form 2553 2 months and 15 days after you create your entity. And if you're an LLC, you can choose to be an S Corp. Or if you're a corporation, you can choose to be an S Corp. You want to make the election, or your accountant or attorney or licensed tax professional at Washington Tax, you want to do it as soon as possible. Otherwise, you're going to have to ask for late election relief, which is up to almost 3 years. You could do it and make a compelling argument why you should still get S Corp status, even though you were late. But anyway, S Corps are a particular something that our clients at WATAX like. The S Corp, of course, provides you that legal protection like an LLC, but it also offers you some tax benefits. For starters, you should, if you are an owner of a corporation or an S Corp, put yourself on payroll as the owner, and that will create a straitjacket, so you make sure you have tax withholdings. And you can also choose your compensation as the owner, and then the remaining profits of your business will come to you in the form of dividends, which are taxed without Social Security or Medicare taxes. So if you're making, somewhere around 50 to 200,000, you might really benefit from being an S Corp, as you won't have to report all of your income as wages and avoid the Social Security and Medicare tax for a portion of it. So when we're seeing clients that are, have growing businesses and are making money in that threshold, or really any threshold, we often will assist our clients to become S Corps. I should also add, S Corps, one of the, top of the line things about an S Corp that's kind of a neat little trick is you can create a SEP IRA within an S Corp and sock away $57,000 tax-free. That's a lot more than the $7,000 that you can get individually in an IRA. So those are a couple benefits of an S Corp. That's our preference. But for some of you, just being a sole prop is the way to go. As your enterprise is simple, you're in the 5 figures, profits a year. Basically, we're going to segue.
I think we're kind of stepped up here. We're now starting to think about a business that's maybe got some employees, maybe got some issues that stem from getting a little larger, and what kind of concerns might a small business owner who has payroll, what might, as far as the tax implications go there?
Very good. So Washington Tax Service, historically, we are tax resolution people. That's our kind of core business, and we've just gone in many other areas since, like expats and tax compliance and business compliance, like we just covered. But payroll taxes and back taxes is our original skill set. And payroll taxes, businesses fall behind on, namely the Form 941 taxes, which are the Social Security, Medicare, and federal taxes that you're supposed to withhold for your employees. When a business starts to kind of decline in revenues, many owners will borrow from their 941 taxes to survive. Eventually, that's not sustainable.
It's going to kind of catch up to them.
Yeah, sometimes then the IRS will hit you hard. They do prioritize collecting 941s almost over any other kind of taxes.
Is that something that you've seen historically, or is that kind of a new
No, I
escalation?
mean, the IRS, of course, is here in 2022.
Yeah.
It has historically been at its lowest budget in a long time, although there's been some big injections of money recently to keep the IRS going. But 941s have always been a priority for collection because, I guess, in the IRS's eyes, and you can't blame them, it's almost like stealing from the government somewhat. I mean, you're supposed to be forwarding these taxes for your employees.
Right.
And the IRS is going to pay your employees the taxes. I mean, they're going to consider it a credit whether you paid them or not. They should prioritize it probably. Let's get back to some basic themes here.
Yeah.
If you're going to have employees, don't be a sole prop. You want to create an entity that's going to give you separation from the 941
Sure.
tax.
Okay.
And sole prop, if you're a sole prop and you owe 941 tax, you're going to be assessed 100%. If you're a single member LLC, a multi-member LLC, an S Corp or a C Corp, you can be assessed only the trust fund portion, and you'll get an immediate about 55% haircut on your 941 debt should you accrue payroll tax debts. And 45% is a lot better than 100%,
Definitely.
which is what you're going to
Yeah.
get with a sole proprietorship or a general partnership. If partners are fully liable, if you're the general partner. So if you're going to have employees, you have to create an LLC or a corp. You just do.
Mm-hmm.
Just as insurance should your business tank. Now, let's say that you do owe payroll taxes. Let's illustrate it through some examples. If you're an LLC, a multi-member LLC, corp or S corp, the IRS basically is going to have 3 years to assess that trust fund against you personally, and from the date of filing. Once those 3 years go by, they can't get you. In fact, we've had many clients where the IRS even pursued a few of our clients as that 3-year line came about. And clients have walked away owing nothing, which has been a nice victory for some of our clients because we want to get our clients the best deal we can.
So sometimes running the clock out kind of is a
It
strategy.
does work. Now, with the sole proprietorship, you don't get that. You're 100% whacked. Ultimately, the IRS is going to try to pursue you for the trust fund, which technically, I mentioned it's 45% of the taxes.
Right.
That 45% represents federal taxes you're supposed to withhold from your employees' checks, the 7.65 or half of the Social Security and Medicare that your employees contribute to, and that's the trust fund. The IRS, if your entity is closed, generally aren't going to pursue the non-trust fund, which is the penalties and interest, and your 7.65%, which is your privilege to pay for employees. When you're an employer, that is the privilege it costs on the federal level to pay for an employee. That's 7.65. But they forgive that your 7.65% plus the penalties and interest should a business dissolve that is an LLC or a corp.
So dissolution is sometimes a good strategy.
Yeah. And if the IRS is hot on your back, even with the IRS hot off your back, and this actually happened today, we have a client that's going to pay the trust fund portion of their tax that they owe. They owe like $90,000. They're going to pay $60,000 today to get the IRS off their back, and that might just even satisfy the case with their entity that's still open. Bottom line is, choice of entity is huge. Just to sum this up, particularly if you're an employer, and also if you're just an entrepreneur that's wanting to get the best tax rate, the best legal protection, liability protection. We're available here at Washington Tax, 888-282-4697 or 206-282-4555 if you're out of the country, to consult with you about these issues. Compliance issues in general, including if you owe back taxes or haven't filed taxes in a long time, including being a corporation. I should also add, if you are a corporation that hasn't filed taxes in a long time, one of the conversations we might have with you is to not file corporate returns and file a sole proprietor return in lieu of being a corporation. But that's maybe for another podcast.
If you've got concerns like this, you can certainly write us an email at watax.com, and then we can either reach out to you and respond back with some of those questions and have a conversation online, or calling in is always a great way to troubleshoot, see how we might be able to assist when you have these issues regarding entities and payroll tax that might need some resolution.
Thanks, Stuart.
Yeah, thanks, Jay.
Yep.
All right.